When Pete Alexakis moved to Fallbrook 11 years ago, there was a hook that got him.
There was an advertisement about Fallbrook being one of the last areas where you could buy a little bit of land and be close to the ocean.
His home is surrounded by green rolling hills and trees. To him and his family, beautiful views. But for insurance companies, extreme fire hazard.
11 years ago, we had choices, so we were able to get from one of the Berkshire Hathaway companies a preferred homeowners policy with full coverage and good rates.
But in December, he got a non-renewal notice from his insurer. The company said it was because of the fire danger. He was forced to join California's FAIR plan for basic fire coverage only. For coverage in other areas, he got an additional policy from a separate company.
And the impact was profound. We couldn't, if we were going to try and compare apples for apples with coverages that we had before, it would have been probably an 80% increase in cost. So what we did was we offset some of that expense by going, tremendously higher with deductibles and foregoing some other coverages just to make it affordable, frankly.
He's not alone. Insurers like State Farm and Allstate have been offloading their California clients. And while officials in Sacramento tried to reach a compromise with the insurance agencies, homeowners are left with limited options.
Well, it just depends on every individual client and their family and their financial needs. So that really varies, but the higher of a deductible you have, the lower your premium is going to be.
Ashley Beyer-Walasek is an insurance broker in Fallbrook. For fire coverage, she says most homeowners are going with the California FAIR plan and then filling in coverage gaps with other policies for things like water, theft, or liability. There's another option, known as non-admitted policies. These come from out-of-state companies that aren't licensed to do business in California.
What that means is that they are not held to the same regulatory financial stability laws that we have here, but they're also able to kind of insure riskier ventures, or whether it be a fire area or if it was a commercial policy.
She says non-admitted carriers can be a good option for homeowners in fire risk areas, but there could be another risk.
If the company becomes insolvent or goes bankrupt and they are not able to pay out the claims that you're paying the coverage for, you are not able to, as a California resident, to go to the state to either appeal or kind of fight back to help get any help from the state.
But she says many non-admitted carriers have good financial stability and insurance ratings. It all comes down to doing the research for the coverage and price a homeowner wants and can afford.
People who have fixed incomes, it's very difficult to then see their premium, triple in a year, and their incomes aren't increasing.
Homeowners are having to make tough decisions.
I can't believe that an insurance policy and not being able to afford it is dictating your moves in life.
Some choose to go uninsured or underinsured, and others are choosing to sell their home and move out of California. Tania Thorne, KPBS News.